Time now for the markets with Leighton, and you say organic crops are seen as a way to diversify in some areas?
That's right. Grain prices may make some farmers consider it maybe more than in the past. That story coming up here. Also ahead in the markets, there's one surprise for the corn sector in the crop reports. Cotton prices are described by one analyst as just treading water. As China shuts out U.S. eggs and chicken, an official ban is now in effect. This week began with the government's monthly crop report and supply and demand estimates. Extension Ag economist John Michael Riley says there was one strange aspect in the corn numbers. We talked about that as well as the soybean data on Tuesday. Well, John Michael, we have a record corn crop according to the government.
Definitely. Still on pace to be a record corn crop, even though it was a little bit smaller than analysts expected coming into the report. Actually, the strange thing is that they pulled the yield down a little bit. Was 173, currently projected at 171. I think all the analysts were expecting a reduction in total harvested acres, and that's where, but the expectation was for a reduction in total production, but the surprise was in the fact that it came through the yield, not through the harvested acres, but still on pace to be a record level of corn production in the U.S. Pull that down through the balance sheet. You look at demand. Demand was tweaked a little bit, but overall ending stocks much smaller than they were in December, and then much smaller than analysts expected, which that turned into a good day for corn following the report.
So how has the market reacted as we sit here on Tuesday talking about this?
Well, I mean, there was a lot for the market to digest. You had corn and soybeans really going in two different directions, and typically those are joined at the hip and they like to move together. So whenever you get a report that's one way for one and another for beans, it puts market participants in a bit of a state of uncertainty, and so the market was all over the board yesterday. But I think at the final close, corn was higher and beans were a little bit lower.
All right, you mentioned soybeans, kind of building some drama there, but what did the report say about the soybeans?
Well, we saw a larger ending stock number than what was expected. Again, I think the market was looking for some changes that didn't really occur, and as a result, ending stocks were left unchanged when the market was looking for a slight reduction there, and therefore kind of the opposite effect of what we saw with corn. So that put the market a bit on edge there and brought soybean prices down just a little bit.
Are those prices expected to trend lower given the numbers as far as soybeans, or we have to wait and see what
you know, right now, I mean, everybody's looking at 2015. You know, we're trying to get 2014 behind us, but I think it is going to continue to potentially do some damage to the market. I think most of it's been digested at this point, but it will be something that we continue to dig into deeper moving forward.
And I guess as we get a little further here into the winter, the decisions about crop and what's going to be planted and not planted, this report will of course factor into that.
That's right. I think we still have a lot of beans and corn in storage, and so depending on how that comes out of storage will definitely impact prices moving into planting.
In some parts of the country, growing organic food may become more attractive. The Des Moines Register reports that low corn and soybean prices may prompt some farmers to look at organic production as one way to boost their bottom line. One main downside, though, is that producers must make changes to their land, such as ending the use of pesticides. Then there is a waiting period of 3 years before a farmer can receive the certified organic accreditation. Well, in that crop report Monday, U.S. ending stocks for wheat were larger than last month. The USDA also raised world wheat production and ending stocks. Analyst Elaine Cubb says the latest numbers were just another confirmation of the bearish fundamental outlook for wheat.
So I think just looking at the chart, you could see that benchmark Chicago contract continue falling another dollar before it would hit the lows from September. And because it has been divorced from the row crops at this point, and it may continue to experience pressure from the U.S. dollar, we don't know that the dollar is at a high by any means at this point. I think it certainly could continue falling.
DTN reports cotton futures ticked slightly lower at midweek. Dwayne Howell says they were still stuck, though, within Monday's trading range established prior to the release of the new monthly USDA reports. Another analyst, Don Shirley of Georgia, describes cotton as just treading water right now. Shirley says that Monday's numbers are being interpreted as somewhat negative to the cotton fiber market. Our trivia quiz this week is about cattle. The U.S. is one of the top 2 beef-producing countries in the world. This brings us to the quiz question. What country is the second one that is a top beef producer? Is the answer A, Canada, B, Brazil, C, Argentina, or D, Russia? I'll have that answer at the end of the markets. China has banned U.S. poultry and egg exports because of avian influenza. The bird flu was reportedly found in non-commercial flocks in Washington and Oregon last month. The USA Poultry and Egg Export Council says China's ban affects live chicks and hatching eggs as well as poultry and eggs. The council does note that the bird flu outbreaks are nowhere near the major U.S. commercial poultry regions of the U.S. China is, of course, a key export market for U.S. chicken, turkey, and duck products. Last year, the exports to China from this sector topped $270 million. Well, in the cattle sector this week, there seemed to be more uncertainty. One main question revolves around how much underlying support can develop through the rest of January. Analyst Virgil Robinson summed the market situation up this way.
The recent decline, I think, has improved the economics to some extent. One of two things must happen over the next 6 months. Either Fed prices have to get stronger or feeder prices and grain prices weaker. Right now, my best opinion would be over the next 6 months, Fed cattle prices will remain here or higher.
Before our new feature story, let's check the trivia answer for this week. The correct choice is B. The U.S. and Brazil are the top 2 beef-producing countries in the world.